The latest news headlines about the Vancouver real estate market continue to talk about how listings are up, sales are down, and inventory is rising. Some are even saying we're in a buyer's market. But if you're planning on buying or selling in the city of Vancouver, you should know that these reports are missing critical insights and stats that could not only end up costing you tens of thousands of dollars, but could also lead to missed opportunities. In this market report video, I'm going to share those critical and valuable insights for the condo, townhome, and detached home markets on the east side and the west side of Vancouver. And I'll go over the latest news and changes in the mortgage world, discuss how they could impact the Vancouver real estate market and lead to another market shift. Hey, what's up guys? Manny Graywell here with Oakwyn Realty. I help my clients successfully navigate through their buying and selling journeys while protecting their best interests and helping them make informed decisions. Let's start off by talking about inventory. The latest news headlines talked about how inventory was up by 31% in the month of September compared to the same time last year. However, there are three facts that you need to know about this stat. One, the 31% rise in inventory refers to all property types across 17 different cities that are covered by the Real Estate Board. When we take a look specifically at the 6 general markets in the city of Vancouver, only one of them saw an increase in their inventory by 30%. Two, the inventory levels have been higher for most of the year compared to last year, so this recent year-over-year rise in inventory isn't exactly breaking news. However, when we compare the year-over-year increase in September to the average monthly year-over-year increase for 2024, you'll notice that September's increase was smaller for a majority of the markets in the city. And three, last year's inventory levels were some of the lowest that we've seen compared to the previous 10 years. These lower inventory levels were the main reason why we saw prices rise despite the higher mortgage rates. So even though inventory is up this year, it's up from a much lower level. In addition to these 3 points about inventory, I have another critical insight to share using detached homes in Vancouver East as an example. Towards the end of September, there were 619 active listings for detached homes in Vancouver East. But when I analyzed the inventory, 196 of the listings were being marketed and therefore priced as land assemblies or development potential, leaving only 423 listings available for those that were looking for a single family home. That's almost 32% of the inventory that's not available. And this is exactly why you shouldn't rely on sales or inventory stats solely. They don't tell the entire story, and they're not the most important metric. A stat that is important and one that you should be monitoring is the sales to active listings ratio. The sales to active listing ratio tells us if we're in a buyer's market, a balanced market, or a seller's market, and if there's downward pressure on pricing or upward pressure on pricing. Typically, several months of a very low sales to active listings ratio will lead to downward pressure on pricing, while several months of a very high sales to active listings ratio will lead to upward pressure on pricing. Let me share an example to illustrate my point of why the sales to active listings ratio is a much more important stat than the inventory stat alone. Taking a look at the Vancouver East condos inventory graph for the last 10 years, you'll see that this September was the 19th highest out of 129 months, while the months of May through July were also in the top 15. Looking at them as a standalone stat, one could say that this is great for buyers, but when we take a look at the sales to active listings ratio graph, you'll see that the September was actually at the border of a seller's to a balanced market, while the months of May through July were actually sellers' markets. In fact, looking back 10 years, you'll see that the Vancouver East condo market has spent a majority of the time being a seller's market. There were several months when it was in a balanced state, but it's never been in a buyer's market during that time. So even though the inventory levels were at some of its highest in the recent months for the Vancouver East condo market when comparing to the previous 10 years, they're still well below where they need to be to become a buyer's market. Since we're on the topic of sales to active listings ratios, let's take a look at how the other 5 general markets in the city of Vancouver have performed throughout 2024 and where they currently are. Staying with condos on the west side, after spending all of 2024 as a balanced market, it was a buyer's market in September. Moving on to townhomes, for the east side, after spending most of the year as a seller's market, it was a balanced market in September. For the west side, it started the year as a seller's market but spent most of the year as a balanced one, just as it was in September. And finally, with detached homes, on the west side, after spending most of the year between a buyer's to balanced market, it was a buyer's market in September. For the east side, after spending most of the year as a balanced market with a couple of months as a buyer's market, it was also a buyer's market in September. But there's something that we need to make a note of with the sales to active listings ratio for the Vancouver East detached homes market. Remember earlier when I brought up how 1/3 of the inventory was being priced and marketed as land assemblies and development potential? Well, if we account for that in the sales to active listings ratio and remove 1/3 of the listings, the sales to active listings ratio of a buyer's market at 9.5% is actually 14%, which is indicative of a balanced market. Based on the sales to active listings ratios for the month of September, the 6 general markets in the City of Vancouver were either in a balanced state or a buyer state. This is creating favorable conditions for buyers, not so much in the sense of significant downward pressure on pricing, but due to overall market sentiment and less competition as many buyers continue to wait on the sidelines. Some are waiting for favorable price declines, some will wait to move with the crowd, while others are waiting for the mortgage rates to bottom out. And this is where we might be on the horizon of another market shift. Let me explain. The 5-year fixed mortgage rates are currently sitting at around 4.5%. This is a significant drop from where they were about a year ago when they were in the high 6s. Based on some of the forecasts, the 5-year fixed rate is expected to settle at around 4%. We're only 0.5% away from that happening. Waiting for the mortgage rate to drop by 0.5% is not going to lead to significant savings, but it could lead to increased competition as the buyers that have been waiting for the rates to bottom out get back into the market. Another factor that could increase competition, specifically amongst the biggest segment of buyers, which are first-time buyers, is the federal government's latest change to the maximum amortization period allowed for mortgages where a buyer puts down less than 20%. Under the current rules, only those that put down more than 20% can qualify for the 30-year amortization period, unless you're a first-time buyer who's buying new construction. Otherwise, the maximum amortization period allowed is 25 years. But as of this coming December, a first-time buyer who puts down less than 20% can qualify for the 30-year amortization period regardless of the property being new construction or resale. This will lead to an increase in purchasing power by approximately 10%. The current market conditions offer some really good opportunities for buyers, with some neighborhoods and property types being favorable due to less competition, while other neighborhoods and property types are favorable due to less competition, higher inventory, and some downward pressure on pricing. If you would like to find out what the market conditions are like in your neighborhoods of interest, or if you would like to find out where the best buying opportunities currently exist, click on the link below to schedule a complimentary strategy session, or if you prefer, you can call, text, DM, or email me. Thanks for watching and have a great day.